Hi, my name is Darren Joseph from HTJ.tax. We're the team that seeks to demystify this sometimes confusing world of international tax and the privilege of having a deep conversation with Mark. Mark, can you please introduce yourself?
I'm Mark Morris. I'm based in Switzerland. I've been here for about 26 years. I've specialized in automatic exchange of information, which originally was the EU Commission's EU Savings Tax Directive. And that went on until about 2014, and they scrapped that and they adopted the OECD's FATCA made into CRS.
So can you share with us what it is you do professionally?
Primarily, I provide custodial services for trusts to hold underlying entities or partnerships or unincorporated funds. So what I do is I provide the administration services for the custodial. I don't do the actual custody. And later on, I'll explain what administration services for custodial is. And I'm an expert in CRS and CARF, and I certainly know the intricate differences between CARF and CRS. We'll get into that in a later question, okay? I've published over 600 articles on LinkedIn, and I'm still writing about 10 a week. And I don't see other people covering 99% of the topics on CRS that I cover.
Okay, thank you.
Chinese residents using private structures to hold ODI investments.
This is probably the biggest use of structures. So, as you know, in China, it's difficult to get money out. The $50,000 a year, gone are the credit cards that people used to buy private placement insurance at $5,000 a sweep until the credit card stopped. So ODI, overseas direct investment, changed quite a lot in 2018, where they said there are many industries that we don't allow you to, hotels, gambling, etc. So it's got to fall in line with the road and belt strategy, building ports, building railway lines. Funny enough, what it includes as well is the building of, which I'm involved with, is the building of electric vehicles. They want to export their technology. It could be road and belt, because cement factories, railway lines in Maputo, etc. But what changed a lot was, before, you have to apply, file, it's called filing, with two authorities. One is called the National Development and Reform Commission, NDRC, and the other is Ministry of Commerce. And before 2018, they had to approve your investment. Now, if it's less than 300 million, there's no approval that's needed. You get a filing number back from these two, and then you simply approach the State Administration of Foreign Exchange Banks, safe banks, and you say, here are my two filings, and they let you send money out. And that can go to a trust or Kazakhstan cement factory or whatever. So as long as it's not on the forbidden list, there's quite a long list of forbidden investments. It's relatively easy. And the money can be managed until never. And there are structures where if you put it into there, it won't be reported back to China. There's no use saying I invested 300 million, then they report back he's holding it in cash.
Exactly.